Thanks everyone for joining me. I'm Mike Clark. I'm the CEO of ReVolve Renewable Power. So ReVolve Renewable Power, as the name implies, we're involved in renewable energy, but we're involved in a somewhat unique sector within renewable energy in terms of the size of the projects, the types of projects that we go after, and really ultimately the business plan that we employ to make money. Because at the end of the day, we're a power company. We develop projects, we build projects, we operate projects, we sell electricity, we make money off the sale of electricity in one form or another. We just feel that renewable energy right now is in a really unique place within the sort of power sector generally in terms of the opportunity that we see not just this year and next year, but really for the next 50 years. If you look at the marketplace and what types of generation are coming online, it is predominantly renewables, it's wind, it's solar. Absolutely, this is part of the energy mix. It's never going to be the entire energy mix. I'm not here to tell you we're going to displace, all natural gas and coal in the next couple of years. But the simple economics of it is that solar and wind are cheaper than any other form of new electricity generation. And so that is where the money is going to flow long term. And that's why we want to be involved in that part of the marketplace. And so as an operator and developer of projects, we have a footprint across North America. We're based here in Vancouver. We have an office in Mexico City as well. And we look to develop and own and operate run-of-river, so small hydro projects. So we have some projects out in the Fraser Valley. So a day like today, when everyone hates the rain, we love the rain because it means the turbines are spinning and we're making money. We have a wind project as well in Alberta, and we have solar projects across North America that we're developing and that we own and operate in Mexico City. Some of the benefits of renewable energy, I don't need to go into any great detail. I think most people know what renewable energy is, but the reason that it's so attractive right now is primarily because it's cheap and because it's deployable quickly. For a lot of large-scale utility projects, they take a long time to develop, build, and get up and running. Whereas with renewable energy, it really is it's money. For a solar project, you can build those within the space of a couple of months. The development on them is relatively quick because the footprint is relatively benign. There are siting issues with any kind of a project, but with renewable energy, generally speaking, they're less of a challenge to develop. So the market opportunity in terms of our customers, and as you'll see later on, these are definitely the types of people that we target in terms of customers. They are data centers. Anyone that uses electricity and spends a lot of money on electricity, that is our customer. That is our target market. Because generally speaking, for businesses and for utilities, we can reduce the cost of electricity. And so for businesses, that's a reduction in operating costs for companies. For utilities, it diversifies their portfolio, but also provides them cheap electricity that they can then obviously pass along to you, the ratepayer, at some point. High level, who is ReVolve? In terms of the numbers, we have 12 megawatts of projects operating right now. That translates into about $2.5 million US of recurring revenue. So that's long-term contracted revenue. We are an operating entity. We operate these projects, and we'll show you some pictures of those in a second. But that's essentially our baseline business, which is operating a wind project in Alberta, a couple of run-of-river projects here in British Columbia, and then solar projects down in Mexico, which generates that recurring revenue. We also have a part of the business where we develop projects and then sell them. So we sell them on to larger players in the marketplace for a developer return or developer fee, and that forms part of our revenue as well. Last fiscal year, 6.7 million, 2.5 in net income, profitable year. Not necessarily profitable every year because that is a combination of the recurring revenue and asset sales, so milestone payments on the sale of assets. So that will definitely fluctuate year to year, but it's a good, strong business model, especially in these sort of turbulent times for microcap companies. It's nice to have long-term recurring revenue. And then our project pipeline is at 3 gigawatts, so that's 3,000 megawatts. So it's a significant pipeline of projects under development, anywhere from site secured all the way up to interconnection already achieved. So if you look at some of the recent highlights in terms of some of the milestones, very recently in Alberta, we have a project, 16 megawatt project, anywhere from a 25 to 30 million capex project that recently received its Alberta Utilities Commission approval, which is the key regulatory permit for projects. It's not quite ready to build, but it's basically ready to build. We still have to go through a little bit more on the interconnection side of things, but this is a project we're now targeting for construction in 2026. So if you think back to the last slide, 12 megawatts right now operating. This is 16 megawatts, so obviously would more than double our operating capacity and more than double our recurring revenue as well. So we are definitely, if we're not at it now, we've passed the sort of inflection point with respect to a lot of these projects that we're developing that are now late stage projects, getting them to the place where we can either sell them or we can build and own and operate them. We signed an agreement, a binding LOI to acquire another project in Alberta. So this one's 30 megawatts. And essentially this is a project that has reached a late stage of development, so a lot of value, but the developer basically hit a bit of a wall with respect to funding. And this happens quite a bit in the business. You have smaller developers who are looking to take a project, from X to Y and hit a wall at some point. And so we'll step in. There'll be an upfront option payment to them, and then we'll take over the development of the project and get it through the permitting process, and then build and own and operate that as well, which is the goal. This will fit in very nicely to our sort of strategic timeline in terms of assets that we want to own and operate, and that construction wouldn't be until 2027, give or take. So after that first project there, Bright Meadows. Distributed generation, these are commercial solar projects, so solar projects that we install on the rooftop of businesses, primarily in Mexico right now. So we have a team of about 15 people in Mexico City, and that kind of actually goes back to the founders of the company. One of the founders is Mexican, based in Mexico, so we develop a lot of our business in Mexico based on that experience. So a large portfolio of projects. These are a little bit different in that really all we're waiting here on these projects is for the customer, usually a business owner, to say yes and sign on the dotted line. And so much more of a standard sort of sales process, we'll call it. So we have a sales funnel of about 195 megawatts of projects, 20 megawatts at late stage where we have a proposal in front of the customer whereby we would go and build the solar system on their rooftop, sell them electricity. They save money on their operating costs, and we make money on the sale of electricity. And it's an interesting model because it is truly a win-win for everyone. We're reducing their electricity cost, and we can only do that because solar is so much cheaper than the cost of electricity that they would get from the utility in Mexico and pretty much everywhere. And then on the Mexican wind side of things as well, we have two large projects in Mexico that are at a late stage of development that we're looking to sell. So our model is one of develop and own or develop and sell, and we'll get to that in a second in terms of the model. But the idea here is that for these really large projects, and these are about 550 megawatts, so well over $1 billion in capex, not projects that we would be able to build as a 15 million market cap company. So what do? We still develop them, we still create that value, and then we look to sell them at the appropriate stage. And those projects in Mexico right now will be looking to sell, or at least launch the process to sell those projects this year. This is the value in the company. It doesn't look that sexy, but I tell you it is. It's a very interesting portfolio that has significant value across multiple jurisdictions and multiple technologies. And all that means is that any given time, if something like Donald Trump happens, we have the ability to sort of move our capital, as limited as it is, to other jurisdictions like Mexico, like Canada, or other technologies. So for instance, in the US, obviously wind energy has come under a lot of scrutiny. We have battery storage projects that are under development, solar projects. And so we have the ability to move towards projects that are our nearest term wins, is the best way to put it. That's why we focused a lot of energy right now on Alberta and on Mexico, because while the chaos is sort of occurring in the US, we're going to continue to move some of those projects forward, but it probably doesn't make sense for us to spend a lot of money. And so if you look at that portfolio, the blue projects there are operating assets. Again, a couple of run-of-river projects, wind projects, and some solar. The dark green, advanced stage projects. So these are projects where we have the site secured. We've probably done several years of study on the resource, be it wind or solar. We may or may not have interconnection access on these projects as well. So they're quite far down the development path. And then you have a very large portfolio of projects below that, about 3 gigawatts, 3,000 megawatts. They kind of fluctuate depending on permitting, depending on where they are on the development path. Either they're early stage, mid stage, or hopefully get up to that late stage of development. And it's not just money. It definitely takes money to move them up this development path, but it also takes some cooperation from regulatory authorities, the sort of the political dynamic in any given jurisdiction. While we see what's happening in the U.S. right now, in Mexico, it's actually the exact opposite. We had these large projects that were sitting on a shelf for the better part of 4 or 5 years under the last administration that have now accelerated because it's a very pro-renewables administration, and things are moving much quicker. So having this sort of diversified portfolio is quite beneficial for shareholders for sure. And it's not something that you see in a company of this size, I'll be honest. And you do your due diligence and take a look around at other project developers that are out there right now in the public space. A lot of them will have 5, 10 projects, but not with this level of geographic diversification and technology diversification as well. So this really underpins the value in the company. So I talked about those projects that we would sell are in Mexico, those large projects. So the projects down there at the bottom in yellow are projects that we have sold in the past. The company has actually been around since 2012, went public in 2021. So the public company investors are now starting to see the benefit of a lot of the work that was done over those earlier years where we acquired land, acquired projects, continued to develop those projects, and now they're getting to the stage where we can actually build them or potentially sell them. Track record of success, I think everyone has a slide like this, and so I won't bore you too much with it, but we've been doing this for a while. We have transacted on large projects, small projects, we've built projects. We've kind of done everything either within this company or in other companies as an executive team. And so we're pretty proud of what we've done to date. Share price notwithstanding, us along with other micro caps have been hit pretty hard in the last year or two. But fingers crossed, maybe there's a bit more risk appetite these days. So this is really the approach that we take when we develop projects. If you're developing a small project or developing a big project, oftentimes it takes the exact same amount of work. The challenge comes when you have to start expending real dollars in terms of the construction of the projects, definitely. And so for us, what we try to do is we develop a variety of different size projects for a variety of different technologies. And at a certain stage, we decide whether we want to own and operate them or whether we want to sell them. And that for us is around 50 megawatts. So depending on the type of technology, the CapEx is around $50 million, give or take. Anything above that, we're telling the market, we're going to sell those projects and we're going to take those developer returns, those milestone payments, and move on and recycle or reinvest that capital into projects that we can own and operate and generate recurring revenue. And it's a really good model for a couple of reasons. As a small cap company, you don't want to be reliant on public markets, obviously, for equity raises every 6 months. So this allows us to take some of those milestone payments and reinvest them and recycle them into projects. But the other is that there's a real opportunity for these sizes of projects. Everything everywhere is going bigger, hundreds and hundreds of megawatts in terms of project sizes. There's a real opportunity in these smaller to mid-sized projects, and we see that in the marketplace right now, both to acquire, which we talked about earlier, and to develop our own projects. So this one I'll let you, sort of review at your leisure, but this is really the background about why we like to focus on what we focus on in terms of the project sizes. For the big projects, some people would say, why not just develop the big projects? You make more money. You do, but it's in lumps, very lumpy, right, in terms of the revenue stream from those projects. And it's also risky. At any given time, you can have a regulatory change that will delay a project 3, 4, 5 years. And so there's risk associated with that. And so we like to augment that with smaller projects that are faster to build and faster to get to revenue. So these are the projects we own right now. So those are some of the customers. Our projects in the Fraser Valley, we sell electricity to BC Hydro under 30-year contracts. We sell to the city of Medicine Hat from our wind project just outside of Medicine Hat. And then all of those other projects or companies are Mexican companies, basically commercial entities that we sell electricity to from those rooftop solar installations. And then all that equates to that recurring revenue piece that really a year and a half ago had almost zero in terms of recurring revenue, and have built that up to about $2.5 million to date. So a nice little growth trajectory in terms of the recurring revenue piece of the pie for us, and it's all based on the projects that we develop and that we then sell electricity to our partners. That's what they look like. If you've never seen a wind project, that's our project in Alberta. That's our project, the Hunter Creek project up by Hope in the Fraser Valley. One of our solar projects in Mexico in Colima that we just built earlier this year. So again, takeaway here, not just pretty pictures. We're an operating company. We have operating assets. And then if you look at the sort of, the pipeline behind that, there's more of these projects to come, both on the mid-size utility. So that Bright Meadows project, we have projects in the US and other M&A opportunities that I talked about in Canada that are sort of mid-size utility, so bigger projects for us, definitely. And then distributed generation in Mexico primarily, which are these rooftop solar selling electricity to the commercial entities. So a nice pipeline of projects there as well. Now the develop and sell, this is where the big sort of headline numbers come in, because when we sell these projects, they are big numbers usually, and hopefully, I'll say that. And so the biggest one to date, there's a company called NG that acquired 2 projects of ours a couple of years ago, 1.25 gigawatts, so a very large asset. CapEx over a couple $2 billion. Again, not a project that we would ever be able to build and own and operate, but we do the development work, we acquire the site, we get the project into interconnection, take it as far as we can, create as much value as we can, and then sell it to a larger entity. So what do you make out of that? We invested about $1 million into that project, and this is a bit of an anomaly because this is such a big project, but we invested about $1 million into it. We've so far received about $6.5 million. These are all US dollars. So we've already seen a 6x return. Now we sold the project, the disclosure on it was between $40,000 and $50,000 a megawatt. So if you do the math on that, there's still a substantial tens of millions of dollars in milestone payments that are still to come. And of course, if you look at our market cap, it's $15 million, and yet we still have tens of millions to come in milestone payments. The question is, what is the disconnect? What is the risk? We sold the project, so we don't control it anymore, but we sold it to a multi-billion-dollar utility that we believe has the ability and desire to move this project forward. So they're milestone-based payments that are out of our control. But having said that, though, they are in Arizona, they feed into California. It's a really strong market for solar and big solar and storage projects. So there's a lot of, I don't want to even say upside, because this is a contracted sale. So these milestone payments or future milestone payments are set in stone. The question is one of timing, is when is this going to occur? And the market has taken a view on that it's going to be a little while, and it may be a little while. But at the end of the day, we have other projects behind that we're going to do the exact same thing with, including Mexico, including other large projects. So, at the end of the day, the cash is going to be great when it comes in, because we'll be able to then recycle that and reinvest that into projects we own and operate. But it's also proof of concept. We've done this before, and we're going to do it again. So here's a couple of the future or the previous transactions that we have completed. Quite a few of them in Mexico, the Baus and Parker. That's one we referenced there in California, or the feed into California. So the future opportunities is obviously more exciting than what we did 10 years ago. When we look at those 2 Mexico projects, over 500 megawatts, So a large portfolio of 2 projects that we'll be looking to sell at some point in the not too distant future. Again, it's part of our develop and sell model, so it's something we'll be looking to execute on here pretty quickly in terms of getting a process started to identify potential buyers for that. We have other projects as well that are relatively late stage. We have a couple of bigger run-of-river projects here in BC. And if anyone follows the BC marketplace, it's very quickly gone from 0 to 100 in terms of speed in the last 2 years. BC Hydro it's a monopoly, right? And so if there's no BC Hydro procurement process in place, there's really nowhere to sell power from a utility project. After Site C was completed or has been completed, BC Hydro did an analysis and realized they need a little bit more electricity than they had predicted, and so had a recent power call. We're in the middle of another power call, and they're likely to have power calls every 2 years for the not too distant future. And so what that tells us as a company is that there's a real opportunity in BC again, after it's being somewhat dormant for the last 10 or 15 years. That there's an opportunity, and we have projects under development here that have kind of been sitting on care and maintenance like they were in Mexico, but maintained and have had a significant amount of work done. So some, again, upside on the project development side of things for us here in Canada, in BC specifically, those large project sales. And then another phase of a project in Mexico, a little bit earlier stage, but still big, 400 megawatt project that we're developing, in addition to the other 400 and 150 megawatt project. A lot of numbers thrown at you in terms of megawatts and that type of stuff, and so I don't, we can talk about what that means in terms of power, but at the end of the day, these are company-changing type projects in terms of the size of company we are right now and in terms of the potential proceeds from them. We have acquired a project in the past. When we talk about M&A, this is not necessarily about mergers or in terms of our current evolution, but picking off smaller developers or smaller pipelines or portfolios of projects that the projects themselves are not distressed, but perhaps the seller is. So good, strong projects with good returns that we can acquire basically at a discount to market, and if not cheaper than replacement cost, at replacement cost, which we would do all day long, capital not being an issue. But so what we do is we try to identify really good, strong operating assets, acquire them where appropriate, or acquire earlier stage development projects as well. The previous presenter, touched on AI and a lot of the discussion around AI and how everything is AI, and everyone's sort of trying to jump on the AI bandwagon. And you see a lot of small cap companies doing the same thing. And so I'm not going to do that, but I will tell you that data centers and the demand for power drives a lot of our business right now. And without a doubt, will drive the demand for power going forward for the next 10 or 20 years. It's putting pressure across the grid everywhere. And that trickles down to you as homeowners and ratepayers, but also to larger manufacturers and businesses who want to interconnect, who want to build their businesses, and they can't do it because data centers are sucking up all the power. And so it's a very interesting dynamic right now in the power space, where you have, on the one hand, someone like the Trump administration trying to limit, wind and solar, new projects coming online, and then data centers and digital infrastructures saying, we need power, we need more power. So where do we fit into it? Historically, we would just say, look, we would try to sell electricity to whoever, wants to buy it, that we can make money off of. Sounds great. But there's actually a more interesting play for us as a developer, and that's to be more involved at an earlier stage in terms of digital infrastructure sites and the development of those sites. So if you think of what we do right now on the project development side, we look for a site that has all of our criteria. So it has good resource, right? So is it sunny? Is there a lot of wind? Does it have access to interconnection, so transmission and grid connection? Can we acquire the site for a reasonable amount of money? So we already do that work, and from a digital infrastructure point of view, one of the things is there's a real interesting overlap between what we do for a site assessment and what they would do. Essentially what they would do is they would layer on a couple of additional criteria, one being fiber access to fiber, close by, very close by, and also in some circumstances, access to natural gas. And the reason for that is that data centers right now are looking to scale up quickly, and the utilities can't always meet the demand. And so usually the quick fix is natural gas. Because it's relatively cheap and can be deployed quickly compared to larger infrastructure, larger utility plays that take many, many years to build. A behind-the-meter project, can be developed and built, within a year to 2 years. So we're overlaying those criteria now onto our site selection, both in terms of potential acquisitions, but also in terms of our current portfolio. So that 3 gigawatts of projects, going back over them to determine whether or not it makes sense to start developing them as a digital infrastructure site. So stay tuned on that. We'll have some more to say about that and specific sites. All that to say is that, from our point of view, up to a certain point, we're doing 80% of the work already. So we should do that additional 20%. We're not going to be data center operators. That's not our business. Don't know it, don't know that business, don't understand it, but understand the underlying criteria in terms of sites and site acquisitions, and we're already doing that part of the business. So some near-term catalysts, definitely in Alberta, we're going to be looking to build that project in 2026. We're moving forward. We have geotech crews going out now to do that initial geotech assessment, and we'll be looking to build that in 2026. Depending on the Alberta winter, this is close to Edmonton, so we'll see how that goes as we get towards the end of 2026. But that's the sort of timeline for commercial operation of that project, which is very exciting for us. That will be our largest project to date in terms of operating projects. On the Mexico utility side of things as well, we noted, that's within the business model, that develop and sell for those large projects. We'll be looking to execute on that and start that structured sale process for those large projects in Mexico. So definitely stay tuned on that. On the M&A side of things, we'll continue to look for those smaller opportunities that we can add value to in terms of those smaller projects. On the DG side of the business, we're going to get some of those additional projects built out in Mexico as well. And then we'll start putting some meat on the bones of this digital infrastructure strategy as well. I'm going to skip the target market overview because I talked a bit about that. A quick bit about my background before joining ReVolve about a year ago. I ran a construction company that built solar projects in the US. So that's really sort of my background. And then we will wrap it up on the shareholder information. About 50%, just over 50% closely held, 67 million shares outstanding. All of the debt in the company, which is about 10 million right now, project level, non-recourse financing, so it's all serviced by cash flows from the projects, no corporate debt.